Hey guys, it's your trusted realtor, Ashley Brown with Long and Foster Real Estate. Today, my special guest is back with me, Ryan Furman, from my in-house mortgage consultant with Prosperity Home Mortgage. And today, we're going to talk about the different types of loans.
Hey Ashley, thanks for having me back. Excited as always to be here, and I'm excited to kind of explain to you the different type of loans we have and what the difference is between those types.
Yes, I am so excited for this because I know a lot of people have questions about different types of loans. So Ryan, thanks for being here, and I'm excited to have you back. Now Ryan, what type of loans do you offer?
Okay, so we offer mortgages, obviously, which basically the main types of mortgages is a conventional loan. There is FHA, there is VA, there is USDA. There's also jumbo products, and there's also what's considered non-conforming loans, which are more along the lines of like a bank statement loan program or somebody that's a foreign national. We have programs like that for that as well. Most type of loans that we're doing usually though is a conventional loan, which is basically backed by Fannie Mae and Freddie Mac. A minimum down payment on that loan type is only 3% for a first-time home buyer who hasn't owned a house before or in the last 3 years. FHA is another great option for first-time home buyers that only requires 3.5% down. And the other option is a USDA loan. USDA loans don't work everywhere, but what they do work in your more rural areas, with that is a 100% financing program. There's also income limits based on that USDA for the approval. The main thing that we do here is we would do a loan application with you, find out what's going to meet your needs and put you in the best situation possible by choosing which type of loan is going to work for you in your current situation, as well as the type of property you may be buying or the location of that property to make sure that you're going to get the best deal that we can possibly offer you.
Perfect. So that kind of shuffles everything into one, but can you break down briefly which ones are suitable for different situations and people's real estate needs?
So the main thing is with a conventional loan, the minimum percent down is only 3%. Now, if you're putting less than 20% of the purchase price down, you may or may not have mortgage insurance. With a conventional loan, you have the option to have monthly mortgage insurance till you get that 20% equity point, or you can also buy out that mortgage insurance early with basically doing what's called borrower paid mortgage insurance, where you pay an additional fee or finance that additional fee into the loan amount so that you never have mortgage insurance for the life of the loan. FHA loans all have mortgage insurance basically for the life of the loan. So what that means is you have a low down payment of the 3.5% to get you in the house. But the main thing with that is you will have mortgage insurance for the life of the loan. Whereas with the conventional loan, you can either buy it out, or if you, once you get to 20%, or if you put 20% down, you would never have that mortgage insurance.
Oh, okay.
A VA loan is only for a veteran, so it's got to be somebody that's either an active duty service member or somebody that has served in the military. With that, it's 100% financing, and there is no mortgage insurance on a VA loan. USDA loans also are 100% financing, but there are income and limits on those, as well as geographic restrictions. Generally, it has to be based in areas a little more rural than other areas. But the main thing with that is there also is a little bit of a monthly mortgage insurance with the USDA. So these are all things that we would look at depending on where you're looking at, the type of property, and then sometimes even the condition of the current property to determine what's going to be the best loan type for you and your situation.
Perfect. Ryan, are there any penalties or fees associated with early repayments, late payments, or any other restrictions?
Great question. So in the state of Maryland, there is no longer a prepayment penalty on a mortgage.
Wow. That's
There used to be prepayment penalties to where what would happen is, say for instance, you did the loan, you closed, the lender would state that you'd have to wait 3 years before you could refinance, or if you sold the house, you would have to pay an additional fee to the lender in order to be able to sell the house or refinance out of that current loan. The good news is that no longer is an issue, so you don't have to worry about that with any loan type that we offer here or any other lender for that matter. Late payments generally are calculated on a mortgage if you ever go past the 15th of a month.
Okay.
Most mortgages want you to pay it between the 1st and the 15th. There is no penalty. But if you do pay it on the 15th, one thing that will happen is there's usually a 5% of your monthly payment amount applied as a late fee. Now, one other thing you can always look at doing to avoid this would be to do automatic payments, so you know that the mortgage payment is coming out before the 15th. The other thing that's an option out there too that a lot of people like doing is the bi-weekly payment, to where you can split your monthly payment up into 2 different payments throughout the month. If you do that, you are not going to be late because basically you have set that in place with the mortgage company to have the payments taken out. A lot of people like doing that option because it helps break up the size of the payment, but it also cuts down on the term of the loan by reducing the interest because more money is going towards your principal faster.
Right, and that was going to be my next thought was if you're breaking it up, you're obviously going to pay a little bit more. Eventually, you're going to take down an X amount of months off.
Exactly. So for instance, if you were looking at just doing a 30-year mortgage and did the bi-weekly payments, what that works out to be is an extra payment and a half a year. So just to think about that, you would turn a 30-year mortgage into about a 26-year mortgage, which would save you about 4 years of interest you otherwise would be paying if you just made the payment between the 1st and the 15th, as opposed to doing the bi-weekly payments. So it's a great option to budget, to kind of help you get acclimated, especially if you're a first-time home buyer. It's easier, let's say for instance, if your payment's $2,000 to pay a little bit of $1,000 up front, and then $1,000 later in the month, you can time it to your pay cycles, just to make the process a little bit easier for you as a home buyer.
Right, and it gives you that benefit of paying off your
100%. It's always good to keep more money in your pocket as opposed to the bank's, obviously, yes.
Yep, I know that's right. One question we get a lot is, what is an appraisal and who is the appraisal for?
Great question. So, when you are purchasing a home, generally what the appraisal is, it's an unbiased third party from an appraiser that basically is the buyer you paid for through the lender. What that appraiser is going to do, they're going to go out to the property and verify for the lender that the property meets the sales price for the contract that you're now under. The other thing the appraiser is also going to check for is health and safety issues to make sure that there's no big issues with the property. They're also going to make sure to verify that the contract is for the actual house and not a different one, and that the value is there based off of that. Now, once the appraisal comes back, if it comes in at the contract price with no issues, it then moves forward being underwritten and approved. Sometimes if an appraisal comes in lower, we then would have to go back to the seller to renegotiate the terms of the contracts. Now, generally, an FHA, a VA, or USDA are all government-backed products. Those have a little more of a stringent appraisal than a conventional loan would be, and they look for more things that are health and safety issues. So one thing, for instance, is like if you have steps and there's not a handrail, they would hit that. They want to make sure that there's nothing that's going to put somebody in harm's way by going through that house. And if they noted that on the appraisal, then it's what's considered a lender-required repair that would have to be fixed before closing. So the other thing is, with a conventional loan, sometimes we can get an appraisal waiver if you're putting down a certain amount of money and buying in a certain area. If we run the loan through what's called a decisioning engine, it'll give us the ability to offer an appraisal waiver. By doing that, what that does, that takes the appraisal off the table, and it also then you save $525 as the buyer.
Now that we come to the end of this, do you have any promotions, discounts, or any incentives that you're offering currently for
We
clients?
do. So for instance, right now we have, if you are a first-time home buyer and make below the area median income in most any areas in Maryland, and you're a true first-time home buyer, we will give you a free home warranty through Cinch Home Warranty, which is a value of about $525. The other program that we have is for our first responders. We consider a first responder a teacher, a police officer, an EMT, a nurse. What this program does is we would waive the origination fee of $14.99 for them. And that can be used with any loan type and in conjunction with anything as well. So between those two things, we can sometimes get people up to about $2,000 in savings just by going with us as opposed to another lender.
Wow, that's incredible. We got some great information from Ryan today. Thank you so much for joining us.
Oh, it's been my
today.
pleasure. Happy to be here.
I hope some of you found this video helpful, even inspiring. Make sure to join us next time as Ryan here is going to share with us about the process of getting approved for you future home buyers out there. You don't want to miss out on this great information, so make sure you like, subscribe, follow, and share. Now, remember, if you're looking to make the most of this incredible market here in Frederick County, make sure to reach out to me, Ashley, your trusted realtor with Long and Foster Real Estate. I'm here to help guide you every step of the way, ensuring a smooth and successful experience. So until next time, stay positive and keep those dreams alive. Bye for now.